This is Eat, Sleep, Invest, the marketing podcast for real estate investors to get more deals. Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Bryan Driscoll, and I'm here with Tim Herriage today.
Hey, Bryan.
How's it going, man? So Tim's the guy to talk to when you're getting deals and you need the money, you need the funding. So Tim, hey, give us a little background on what all you do over there.
Yeah. Like you said, Tim Herriage, I've been in investing for 20 years plus, and actually just plus a couple months ago. I buy houses in the Dallas area. My wife and I own some Airbnb properties in San Antonio, Austin, Waco, Dallas, Fort Worth area. I invest in some multifamily syndications, and I recently became the executive director of RCN Capital. It's kind of a funny story. I was one of the founders of B2R Finance and Finance of America. And so I started out as competition for RCN. Then I started borrowing money from RCN and became a customer. It's kind of the 4 C's, right? I was competition, and I was a customer. Then I started brokering money for RCN, and I became a collaborator. And the CEO and I just became such good friends that he called me up and said, let's make this a little bit more official. And so now I became a colleague. So it's been fun. It's a great company. The long and the short of it is we're a nationwide private lender. Everybody's trying to get away from saying the word hard money anymore, right? Because it's kind of carries a negative connotation with it. We do fix and flip, long-term rental, and ground-up construction loans on single-family, multifamily, and mixed-use properties, pretty much nationwide. We're in 46 of the 50 states.
Okay, cool. So you guys pretty much have a handle on pretty much any investor, whatever they're doing. If they're buying and holding, if they're flipping, you can pretty much help them out, right?
Yeah, literally this morning, one of my guys, Alan, called me, and we've got this group that buys and flips in California and Florida. They do about 700 a year, and we're able to finance them, and we're giving them 80 loan to value and 100% loan to cost and pretty low rates. And they're happy, we're happy, everybody's happy. And then we get them, the mom and pop that comes in, it's their first, second deal, and they're looking for a partner, someone that they can grow with, and that we can our capital can be part of the growth story of their small business.
Yeah. And that's good to know too, because a lot of people think, hey, I got to go to someone and I have to do a lot of business with them to get loans on stuff like this, which brings up something important too. It's like building a relationship. So I'm guessing, like, I know whenever I go to banks, things like that, and get financed, the first time sucks. You got to go through all the underwriting, all that. But once you get through that first one, all the additional loans are fairly easy because you kind of already been underwritten. Now your underwriting's done on yourself. Now they're just underwriting the property. How's that work with you guys?
It's funny you say that. We try to make it one time painful. It can't always be one time painful. No one likes their lender until they're bragging about a deal they did, basically. We try to grow with the borrower and the customer, and we have literally built into our programs, without any negotiation, we have experience tiers based off of the last 3 years. So if you're a 0 to 3 experience, you're going to get kind of our worst terms. And now what is an experience, right? If you've owned a rental property in the last 3 years, if you've bought and sold an investment property, if you're a licensed realtor or licensed general contractor in a state that does general contractor licensing, all of those things kind of are an experience credit. Once you get past the 3+ experience to the 10 experience, that's a whole nother pricing bucket. And then once you kind of get past the 10, it's another. And once you get past 30, it's a whole nother ball of wax. And it's nice because people like me and you that have been in this a long time, you used to have to kind of teach people how to negotiate terms once they've closed a couple deals, Right. And I feel like we've kind of pathed that out to where the customer knows after we get to know each other, they're going to save money on the loans. And a large part of it is what you said, though, Bryan. I mean, once you've been through kind of the process, you're an easier customer to deal with. It's a funny story. So a guy named Matt Ferrigno, one of our number one loan officer at RCN, he has probably closed at least $10 million worth of loans for me and my wife over the last 5-6 years. I had never met him in person before last month at a company event. And it was just so funny. I was like, oh my God, I mean, you may be the first person I've ever done, $10 million worth of business with. And then I finally get to shake your hand. Right. And another funny part is on the Uber ride over to a dinner, we were next to each other and we talked for 30 minutes. And I kind of chuckled there too, because it's like, I may have just spoken to you more than I have in the last 5 years, because and it's a long story to say, he's an email person and my wife and I are email people, right? So we just don't talk on the phone much. And if we do, it's like, hey, the debt service coverage ratio, blah, blah, blah. Okay, great. Thanks. Bye. Like we're busy people. So it's important that people make sure that they're dealing with a lender that will communicate with them the way they want to be communicated with. And I think that's not just a lender. I really do feel like that's all the service providers on their power team, right? One of my buddies here in Dallas, he buys like 50, 60 houses a year, wanted to do a loan with us. So I hook him up with Matt. And Matt calls me. He's like, dude, is it going to offend you if I kick this guy to another loan officer? He wants to talk on the phone way too much, right? Okay. And I was like, no, man. And so Matt kicked him over to this girl named Serena that is a millennial and has no problem texting and talking on the phone and FaceTiming and all that. And they've already done like 10 loans in 3 months, right? So I think that's another important part of any relationship. Like, find someone that you identify with, that you can communicate with the way that you feel the most efficient.
Yeah, no, you know what? That's a great point too, because that's same with me. Like, I don't want to be sitting chatting on the phone. It's like, hey, we just locked up this deal. Hey, what do you need from me? Okay, boom, done. But some people do want to talk. So yeah, finding that right loan officers, because some loan officers want to talk and drill you too. It's like, okay, let me just send you all the stuff you need. Tell me what you need in an email. I'll get it to you. Done. So finding that match that you can do, because then you can do more things with people. And also, like, one important thing I see with lenders is there's so many out there that tell you, oh yeah, we can get you financed. People go get deals under contract. They're waiting, and then the deal falls through on the finance side because they're not up front and there's a loan officer just trying to close deals. So that's another very important thing when any investor is trying to get financing. Make sure you're dealing with credible people that do the underwriting up front versus making you get mud on your face after you got something locked up and you can't close.
I think, that's understanding finance was probably where I was the weakest 20 years ago. And it's probably where I'm the strongest now. Because, I got out of the Marine Corps and I just, kind of tripped into this business and I didn't understand financing. And I think really finding a lender, if you're new, finding a lender that's willing and able to go through different scenarios with you and is willing to discuss. A great question to ask any lender is, hey, tell me some problems people run into when they try to finance a deal and you turn them down, right? Like that. I mean, that's a great question. And we can cover that in a minute because there's some common things that people make mistakes on or they ask us to finance that is kind of out of bounds for the whole industry.
Yeah. What are a couple of those things? Okay.
So rural property. Many times, especially right now with the Airbnb craze, people will bring you a house that's just kind of on a lake somewhere. And they're like, oh, I'm going to make it an Airbnb. And it's like, yeah, that's just not a standard, if we were talking about, because we do Airbnb loans, we look at the Airbnb cash flow. But if we're talking about an Airbnb, we're typically talking about in a major metropolitan area or a place that, if you go to the CFPB website, there's a rule calculator, right? And so we're always looking for things that are not marked as rural and underserved. And here's why. If it's rural and underserved and you make $100 million in the lotto and say, never mind, I'm not dealing with that, so they can take it back, I'm going to have problems getting someone out to the property because by definition, it's rural and underserved. So that's one of those things we run into a lot. People make major renovations, right? So if you don't have a track record of really knowing what you're doing on a renovation basis, your first deal, we look at like percentage of purchase, right? So if you're buying a house for 100 and you plan to spend $100,000 on that house, that's a major rehab. And Bryan, you've been doing this long enough, right? When you see that 100% of rehab to purchase, I mean, you got to be kind of like,
right.
But there's a lot of investors that like, that's what they do. Right. And so if I see that deal and you're a general contractor and you can show me where you've been doing burnout reconstruction for investors for the last 3 years, we'll probably be okay. Right. But if you're new and you went to a course and your first deal is a burnout that's going to need $100,000 worth of work, we're probably going to say no to that. We're lucky we have a very, very, very low default rate, and that's because we don't like to have that happen, right? So we try to set people up for success. Thin deals. A lot of people we see, like they come to us with, they say it's an exit strategy is fix and flip, and like when we pencil it, it's like we know they're not going to make money from the jump,
right?
And it's just bad math. I mean, and so we'll turn that deal down versus collect their 20 or 30% down and let them pay us 10% interest. I mean, that's a new person rate because we don't want to set people up for failure. Now, if they come to us with the plan, they say, oh no, we're going to refinance this and we're going to keep it as a rental property. And the reason that we feel like we're paying, a lot of money for it, but it's in this, area we specialize in, or it's this target neighborhood, that's a different conversation. So thin deals, rural property, major construction, overextended, lack of liquidity and reserves. We see a lot of people that come to us and they have, $20,000 in the bank and it's going to be $15,000 down for the house. And we can't do that loan because we can't feel comfortable about the customer's ability to pay for the rehab and pay for the utilities and the debt service and the yard maintenance and all the things that go with it. So I think, those are some of the major things. Not knowing your credit score, big thing. So lenders like us, we don't pull your credit score till like we're ready to get married, right? When we're just dating, we don't pull your credit score. And I can't tell you how many times people say, oh, I've got about an 800. I've got about an 800. And you pull it and it's a 680. Well, for us, that's a difference of 10% loan to value and, interest rate. I mean, it changes the whole deal. So, I think if you're not sure, go to one of these Experian, Equifax, TransUnion and pull your Tri-Bureau credit report, because most lenders in the space are going to take the mid score, the one in the middle, right? So if you've got, some things showing up on your credit report that you weren't aware of, you want to handle that now instead of, when, like you said, when you're like at the 5-yard line trying to score and you get, the rug yanked out from underneath.
Yeah, no, that's a good tip too. So yeah, because anyone who's trying to, especially if you're newer in the game, go run your credit first and bring that to whoever you're trying to get the loan from. Be like, hey, here's my credit score. It's not just guessing. Yeah, because you're right. You could think you have a 750 or 800 and boom, you got a 680. That's a huge difference on your rate, huge difference on how much the loan to value will be, all that kind of stuff. And also, if a finance guy declines you on a loan, most likely that is not a deal that you want to be buying.
Right.
Yeah. Like
if the conversation is, man, I don't like this deal, but bring me the next one, like you should really like lean on our experience. You know, we fund, you know, we'll fund over 7,000 loans this year, right? I mean, so and our business is simple. And everybody has to understand this about every lender. The business is simple. So first, our job is to make loans, right? We have to make loans. The loans need to be profitable, right? We have to make money on the loans, and the loans need to be repaid. Like that's it. That's the three magic things about lending that we care about, right? And so every little factor influences that. A low credit score, someone with open judgments or bankruptcies or like fraud, bad criminal record, that makes me like a little worried about, will I get repaid, right? A house that's bought really thin or is in the middle of nowhere, that gets me worried, you know, about, is that loan going to be profitable? You know, am I going to have to take that back and spend $100,000 just getting someone out there to mow the yard and get it sold for me? You know, and so all those levers, right? Like they go into the decision, and it's not, I promise you, there's no lender out there that's thinking, we just don't want to loan any more money right now. Right. I mean, it's just those three things. We got to make loans. That's how we pay our bills. That's how we pay our staff, our employees. You know, we have 200 plus people, right? We've got to make loans, but they have to be profitable, and we have to feel like they're going to get repaid. They don't all get repaid. I mean, there are some people that, you know, life happens, right? We can underwrite risk, but we can't underwrite life. One lady, she gave our CEO a big hug at the IMN conference in Phoenix in December, and he didn't really remember her. Well, but anyway, she is now one of the co-founders of one of the largest modular built home companies in the nation. Her and her husband, Corey, founded Better Homes. I think they're building like 1,000 houses right now. But like 8 or 10 years ago, she and her ex were rehabbing a house, and he drained the bank accounts and left. Just overnight, drained the balance, left. They were young people that they were having trouble, you know, but she did the right thing. And here's advice for if you ever do get upside down. She picked up the phone crying and called RCM and said, I'm not going to be able to do this. I don't have any money. He took all my money. And Jeff, we were a much smaller company back then. You're probably not going to get the CEO on the first phone call anymore, but you can get me or someone that can help you. The point is Jeff's like, you know, thanks for calling. Let's work this out. And he helped get her in advance to a general contractor that could fix it up. And he just helped her throughout the process. Right. And you know, it was really cool. Like she was almost crying again in December, like it was the first time she'd ever met Jeff, but she was like, you changed my life and you showed me and you put me in this, because she's like, she would have quit this industry if that had went the way it looked like it was going to go, you know? So, you know, it's all about communication, everything in life, specifically lending. If you are in a deal and it starts to go wrong, don't tell us you mailed the payment, right? Like, I mean, like you didn't mail the payment. You know, just be honest. If you ever do find yourself in a predicament, you know, just address your problem. Don't hide from it.
Yeah. And that's a good tip too, just because at some point in everyone's life, you're going to hit some problems. So yeah, like, especially on something like that, you might be embarrassed or not know what to do. Just make the phone call, because like in that lady's life could have changed directions 2 different ways. And it turned out it helped her out and put her life in a good direction. You know what I mean? But just that one phone call versus her just having a panic and not knowing what's going on, you know, and you guys were able to work something out. So it's good point there.
Do you have kids, Bryan?
I do. I got 3, 10, 7, and 6.
They teach you lessons all the time, don't they?
Oh, yeah.
This morning, literally on the way to school, my 12-year-old, we were talking about Twitter and how Elon Musk bought 9.2% of it. largest shareholder now. And my son, he's a big Elon Musk fan and Tesla fan. And he was asking he was trying to understand shareholders. And because I listen to Bloomberg radio in my truck. So he's asking all about shareholders and the board of directors and why someone else couldn't just buy a share. It was very funny. And who owns the rest of it? But anyway, we're talking. I said, well, son, he's like the richest man in the world. So yeah, I mean, he spent, billions of dollars on this. And he's like, Dad, why does it seem like most of the really rich people are old? and I laughed and I said, well, it's not a rule, but in general, you need to make some mistakes before you can get it right. And I said, all the super rich people that I've ever read about almost went bankrupt or did. And I was telling him, it's one of those things that I encourage my sons to do. John Maxwell wrote a great book, Talent is Never Enough. And in the book, it talks about failing forward, right? Like just you got to be learning. Even if you make a mistake, just fail forward. And you just were talking about that. Too many people come into this real estate investing industry and think they can be perfect. And a lot of them are the ones that never buy a house because all they're ever doing is running numbers on houses versus buying houses. So yeah, I mean, you got to be willing to get your feet wet, but and you're going to make mistakes, like you just said, Bryan. That was the whole point of all that diatribe. You're going to make mistakes. Just when you do, pick up the phone and get your power team on the phone and make correct course, right? If the Titanic sees the iceberg, the wrong thing to do is speed up towards the iceberg, right? You got to turn. So,
yeah, that's an interesting observation he had too.
We talk a lot about, stocks and I told him that, when I first started my career, I was focused on, thousands, right? Everything was a thousand. And he asked me kind of where I am at my career right now. And I said, well, my daily, I'm probably thinking $25,000 increments. And, as far as my goals, it's, tens of millions instead of just millions now. And I said, it's before I go into the work optional phase of my life, which will be as soon as he gets out of high school. I hope to be thinking in terms of 100 millions. Because when you're thinking in terms of 100 millions of your goals, then you've got to be working on things that are in the billions, right? And that's what I'm doing now. I mean, I've got a goal over here, $5 billion. That's what we're trying to originate at RCN in the coming years. I'm working with a large hedge fund that, looking at doing billions a year in acquisitions, trying to help them out. So, I think it's, but you can't get there from here, right? You can't start at $1 billion, right? You got to start somewhere and then just kind of be focused on always making sure you're progressing. If you see the little flag up there, I don't think you can see my discharge back on the wall. One of my great non-commissioned officers in the Marine Corps, he told me, he said, Tim, it's just all about experience, and you've got to form your philosophy off of the things you experience that you like. You try to do that, and you try not to do the things that you experience that you don't like. And I think it's an important thing that people understand, that you've got to experience things in order to understand truly what it is that you want and don't want.
Yeah, 100%. That's some good stuff there.
We're not even talking about lending. We're just like, I see you got barbecue behind you. I love that. I'm a big barbecue nut.
Are you? Yeah. I got into barbecue like probably 4 or 5 years ago. I went out and got one of the big green eggs.
Yeah.
And just started. I'm like, you know what? This is awesome. Cook a brisket or something like that. Because you're not cooking for yourself. No. Like you cook something like that, you're inviting everybody over. So it's creating experiences and stuff too.
Well, that's the fun part about this business. I just like you, about 2018, I was just bored with buying houses. And this just sounds awful, right? But I can buy 50, 60 houses a year in my sleep. It's just not challenging anymore. I can underwrite your loan with my eyes closed. But the barbecue like really started like challenging me, it's like, cause you don't have any control over which way the wind blows or what the humidity is, or if that piece of wood burns wrong. So anyway, it's funny. I saw it behind you. I love it. It's a great passion. And I tell people all the time with this real estate investing thing, so many people get into it and the why behind they get into it thinking, you know what, I'm going to get financial freedom. I'm going to have time for my family and my friends. And then they're on Facebook and Instagram for the next 5 years talking about how much they hustle and grind, and they're posting at 4 a.m. and at midnight about how they're still working. And my thing is, it's not, Simon Sinek wrote a great book about start with why, but most entrepreneurs really need to figure out how to end with why, right? I mean, really try to live that life that you want, like, every day.
Yeah, man. And that's important too. Yeah. Cause like, I see that too. A lot of guys hustle. Even me, I hustle all the time. I'm working all the time. And it's like, okay, some people hustle and they spend all the money too, and they're living that lifestyle. And then some people, like, I guess that's the thing that comes with age too. Like your son's talking, but he's like, hey, why are rich people old? Because you have to figure out how to keep the money.
Yeah.
Just because you make it doesn't mean you get to keep it. And then you have to make that money grow for you as well.
See, and I'm not anti-hustle. People always think I mean that. I'm just saying, you got to, in the Marine Corps, we learned work hard, play hard, right? And there's a lot of days of the week that I don't get up from my desk or off my phone till 6, 7 o'clock at night when it's time for dinner. There's days like yesterday that my brother-in-law was down by the barn with the tractor, and it was about 3:30 in the afternoon. It was a pretty day. I just logged off, went down there and drank a couple beers and hung out with him. You know, I think balance is very hard for entrepreneurs. And I think we create more problems for ourselves than necessary. And I'm not even sure if this is the topic that you wanted to discuss, but I could talk about this all day long.
This is good. I like it. You know, yeah. And that is too. Cause say you're working your ass off. It's like, if you can create the lifestyle that you can take off, like you want to go with your brother, it's like, okay, you know what? I could bust my ass, but then you know what? Someone comes into town. I have the ability to drop what I'm doing. Things still keep running, and we can take those breaks too and find that balance. That's important stuff.
Oh yeah. We're talking about eat, sleep, and invest. So I had to work in some barbecue because we got to eat, right?
Right. Barbecue is my thing, man. I'm telling you. I got a website. It's bryanbbq.com. I keep all my notes in there.
Send it to me.
Yeah. Yeah.
I love that.
Yeah. It's Bryan, BRYANBBQ.com.
I'll get on there and give you some comments like of how we do it in Texas.
You know what? Yeah. Cause I'm always doing crazy stuff on the barbecue too. It's like, I'll invite some friends over. I'm like, hey, cause I'm a digital marketer too. I'm like, hey, we're A/B testing ribs tonight. So we're cooking these this way. We're cooking these this way. Which ones do you like better? You know?
That is some of the best afternoons. And I'll do that. Like my wife will see me out. I built this really big cabana out by my pool. It's a smoke shack basically. And I'll be out there cooking, and she'll come out around 4 or 5 o'clock in the afternoon. She's like, well, what are we going to have for dinner? What are you cooking? I was like, oh, well, nothing from us. I was just, I wanted to try this rub on the chicken, and I wanted to make some sausage for later in the week. And, but that's the thing. Don't be afraid to diversify and free up your time, right? Like I invest right now, I'm invested in multifamily and commercial syndications. And it's hard for folks like us that are the deal guy, right? We're in charge. It's hard to let go. But it has been, I'm 43 now, getting old. It's been nice to get reports from someone else about my money instead of me having to give other people reports about their money. And like to go in there and like tell my wife, it's like, hey, baby, they're hitting the 12% number. All right. Because I think that's, when you're diversified like that. So we still have our fix and flip business. We still have our wholesale business. We still have our Airbnb business. We still have our traditional rental business. We have stocks, bonds, mutual funds, and too many real estate investors want to like knock that kind of thing. And I just believe in diversification. You got to manage it or have someone that you're paying to manage it well. But, over the last 2 years, I got into, I'm invested in a little over 2,000 units of multifamily that I couldn't even tell you the address of any of them. Actually, the other day we were driving down the street in Dallas and I go, look, honey, we own part of that, right? Like, I had no idea where it was. I can tell you this, it's making 11% cash on cash, and the projected return on equity over 5 years is double. So like for me, that's all I need to know. And we've got some commercial investments that we've done as well. And I think that's important. When I look at the title of your podcast, it's eventually you got to get to where the hustle can slow down. You got to, I always say, how much is enough? And stay focused on that exit, right? And diversify, because this business, it'll chew you up and spit you out. And it's kind of up to you which way it spits you out, right? Because if, like you said earlier, if you keep swinging, it's going to swing back eventually.
Yeah, and keeping that balance is so important for your sanity, because you can just dig yourself right in the grave.
Right.
Like you gotta make sure you're sleeping, make sure you're eating right, make sure you're taking those vacations, things like that, breaking it up.
Yeah, absolutely. That's why I insist on being here to take my son to school every morning. I mean, it's like that hour I get with him in the morning, I don't get it every afternoon. Sometimes I'm busy. Sometimes he's busy, and I think that's just important for me, because it's my priority. And, I think investors need to find their priorities.
Yeah, 100%. Yeah, it's not always about the money.
Right. That's the truth. It has very little to do with money, because once you have money, then figure something else out, right? I mean, you can only use so much.
That's funny. That's funny. Yeah, because we're getting off topic, but yeah, it's so funny because whenever you don't have money, you're like, oh, I got to do this to make money. Like your whole drive is to make money. And then once you start succeeding, it's like, well, that's not scratching the itch. Like, okay, I don't have to worry about paying the electric bill, things like that, or whatever we're doing. But you need to find that thing that's going to fulfill you.
But that is the topic, though, right? Because eat, sleep, invest, right? Like the Kiyosaki quadrant, right? You've got employee, self-employed, business owner, and investor, right?
Right.
I think I've never met anyone. I argue with investors all the time. They're like, oh, I love what we do. I'm like, no, you don't. You don't. You like the money that comes from it. There is nobody I've ever met in this business, maybe one crazy person, that if they were told they had 5 days left in their life, would decide, you know what? I'm going to go meet with a motivated seller. That's what I'm going to do. Right? Like, no one says that. You may love what the business does. You may love the deal, but that's not like what you love. And so that's why I think it's important that you invest. Buddy of mine here in Dallas, he's 32, 33. He's already got $10 million worth of houses, because when he got started, he started investing, not flipping, not working, investing, keeping rental property, keeping owner finance notes, putting money back, living below his means. And now it's just so awesome to watch him and his wife, Sarah. And I need to introduce you to him. You would love to talk to the guy. He's just, he's very focused, because he is investing in his future. And I think that is the topic of what we do here, because you can make a lot of money, but like you just said, how do you keep it, right? And one of the easiest ways to keep it is to keep rental property, refinance them, a guy like me, and let someone else pay off that debt for you. I mean, we were refinancing almost every one of our houses last year when interest rates were at 3.5% on these investor loans. And my wife was even like, are you sure? Like, we don't need all that cash. What do we need to pull that cash out for? Well, now, the rates on those same loans are 3% higher than it was. And inflation's running 8 or 9% or 10% probably. So 3.5 debt is free. It's literally like when you look at the mathematical kind of yield curve on it, it's free. And someone else is paying it back for me.
Right. Yeah. That's the nice thing with rental properties. If someone's paying it off, you get the tax, all that kind of stuff. All right. So Tim, the types of loans that you guys do, let's get on next. I want to make sure that everybody knows if somebody's purchasing a property, because you guys do the hard money and then you do long-term too, right?
Yeah. 30-year fixed. We have 30-year fixed right now, Bryan. A lot of people are choosing, and I'm actually teaching the loan officers a class on this today, because, I'm not only a lender, I'm also an investor. And I was thinking, okay, well, now the rates are higher. How am I going to manage that? And so what I kind of came up with is you can take an adjustable rate mortgage. Most of the time, the 30-year fixed loans have a 5-year prepayment penalty. Well, you can actually go down to no prepayment, a 2-year prepayment, a 3-year prepayment. you can change that. So when I look at the pricing model, which I can't give the public because it's very complex and it's proprietary, I've kind of been problem solving, but I've been problem solving really for myself. And that's what's great about doing business with a company like ours, where it's run by actual investors, because I have actual houses that my wife and I are working on that we're going to have to refinance, right? So I'm thinking through, what am I going to do? What do I see in interest rates? Do I think they'll come back down? How long do I want to be committed in it? So yeah, we do long-term financing on normal rental properties and also Airbnb properties, vacation rentals. It just can't be rule. That's the only thing. You can do a 30-year fixed. You can do a 5-1 arm. You can do a 7-1 arm. So 5-1 just means it's fixed for 5, then adjust every year after.
Right.
Okay. Or you can do a 30-year fixed, but you could do interest only for the first 5 years. Nice thing about that is, say you rate 6%. The first 5 years, you're paying 6% interest only. Well, then it basically becomes a 25-year amortization after that, but the rate stays the same. So if rates don't go back down, you're still locked in at a good rate. And that's another thing. A lot of people have been really spoiled by the last 3 or 4 years, and they weren't in the business before. I remember when a 6.5% rate on a rental property was like, it made me so happy. I remember before the Great Recession when I was paying 9.5% to my bank, and it was just the best loan ever. So I think, I keep saying rates are high, but they're not. They're just not super low. And the market will adjust. So yeah, 30-year loans, long-term rental loans, 12 or 24-month fix and flip loans. So some people are taking the 24-month loan right now because they're not sure about rates, and they just want to buy it, fix it, rent it, and then wait, try to time the rates, and then refinance it. And then we do ground up construction as well. And we're a little different on that. We'll actually finance the lot for people. Now, we don't finance raw land. So it actually has to be a build ready lot that is permitted and entitled and zoned, ready to build.
All right, cool.
Big difference.
Yeah, so that's important too. So a couple things you hit on there. Number one, you're an investor. So you're thinking, you're not just going to we have PNC Bank here, so I'm going to talking to the guy behind the desk that's just crunching numbers. You're actually thinking, okay, here's what you're trying to accomplish and trying to solve a problem. It's like, okay, we can do this, we can do this, we can do this. Here's a couple options. And then also people can do the short term with you and then roll it into long term if they want to keep it as well. Right. So, and that's huge because a lot of people are just like, hey, here's what we do. Like we offer 2 products.
I think number one, the company before I got here was already good at it. And I think we're just getting better at, the BRRRR mindset, right? Like understanding that all investors, myself included, want debt on the front side and debt on the back side, but they don't want to deal with debt. Like they're really just trying to get the house and sell the house or keep the house. And I told the team, the managers of the company, that we're our own biggest competition, right? We have to make it easy we have to be easy to do business with, and we have to have clear communication with our customers. If we have that, the products are there. We've got a product for almost anything that your customers would need in the residential real estate investment space. And if we don't have a product that enough people want, we'll create it.
Yeah, that's good. Last question for you here. Someone comes to you, has never done business with you before. What do they need to bring? And what's an expected turnaround time? And what's the minimum credit that you guys will even deal with?
Yeah, in this environment, you really need to have above a 650. We prefer a 680. We say we'll do a minimum loan of 75,000. We really like to do 100,000. You need to be a little organized, right? You're going to have a company because we don't do personal loans. We do business loans. So you're going to need an LLC. It can be a simple single member LLC. you can get on LegalZoom and create one in 30 minutes. You're going to need a company. You're going to need bank statements that like show that you have money. It's just one of those things. If you do not actually have to have a credit score or be a U.S. citizen, because we can do non-recourse, it just changes the rate and the amount we'll loan. And so that's kind of a different thing. But if you do have a credit score, you can't say, oh, well, I want the non-citizen. It doesn't work that way. Like if you have bad credit, that's still bad credit. And then, you really need to have a deal, or at least a scenario deal you can talk about. We do it all the time when we get someone that we're trying to pre-approve on like one of our advanced programs. We call it a mock sizer. So the sizer is what we do the loans in. And we'll do a mock one based off of, you're like, okay, the normal house I buy is 150. I spend about 20, 30,000 and fixing it up, and they're worth 250. All right, great. What's your credit score? And we can kind of, what zip code are they in? We can kind of model it and get you kind of a really tight approval. If you call and just say, oh, I'm buying houses for 70 cents minus repairs all over Texas, it's like, yeah, I need more. So yeah, sample scenario, amount of cash you have, mid credit score, and you're going to need a company.
Okay. Pretty cut and dry. And when you guys are financing these, so are they in the company name? You're just personally guaranteeing them?
Yeah. So they're in the company name. They don't report on your credit. They're not reliant on your W-2 income. We look at the property as the source of repayment for every loan. So if I get hit by a bus, RCN can, the rent payment can be made with the rent. The mortgage payment can be made with the rent I'm receiving. That's kind of the way we look at it.
Yeah, and that makes sense. And that's important too, because it's not driving your debt to income on your personal up like crazy.
No, I've got dozens of these loans and they're not on our credit report.
Yeah, cool. All right, man. So what's the best way for people to reach out to you if they want to get a hold of you?
rcncapital.com. Just reach out. My direct line, I don't even know my own direct line, is 214-291-7150. You can call or text that, 214-291-7150. You can email me, therriage@rcncapital.com. I don't work individual loan files. I'm more than happy to say hello, maybe have a 15-minute introductory call. But after that, you're going to work with the loan officer, because the loan officers are smarter than me and more active than me. And they sit in front of a desk and run loan scenarios 12 hours a day. So they're going to be a lot better than me at it.
Cool. All right. So everyone, hey, you got deals. If you're looking for funding, reach out to Tim. He's your guy. They can do a lot of good stuff. And it's just hit him up. Worth a conversation. And Tim, hey, thanks for coming on. And for everyone listening, yeah, go out and crush it and have a good day.
Bryan, thanks for having me, man.
Thanks, man.